Hey everyone, welcome back to Corporate Decoder, the place where we try to understand complicated financial documents so you don't have to. Today we're diving into this SEC filing from ESG Inc. and let's just say it's a bit of a mushroom growth story but with some interesting pickles along the way. We'll explore their latest numbers, the risks they're facing and what it all means for investors. Before we jump into the muddy details, if you like getting these easy to understand breakdowns of financial reports, make sure you're subscribed to the channel. And hey, we've got a growing community on Discord where we talk more about these filings, so check the link in the description below. This is essentially a prospectus a document companies use when they're trying to raise money by selling their stock to the public. ESG Inc. is looking to sell 5 million shares of their common stock at 5 million shares of their common stock. At $5 each, they're a Nevada company, but their actual work happens through subsidiaries in China focusing on mushrooms from growing to processing and selling them. Now, right off the bat, they flag a big one, doing business in China. Even though they're a US company, most of their operations are in China. This means they're exposed to a lot of risks from Chinese laws and government actions. Things can change fast there and sometimes with little warning. They mentioned that any government intervention or new rules could really hurt their business and the value of their stock. Let's rewind a bit and see how they got here. The company started as Plasma Innovative Inc. and was actually working with cold plasma technology for agriculture, but they switched gears and through a share exchange became ESG Inc. They've got these main operating companies in China that handle everything from growing mushrooms to making compost and even mushroom seasoning powder. Funan Allied United Pharma Products Co. Limited, or AUFP, is a big player here. They're all about high quality white button mushrooms and compost. They even have this green food certification in China. For the year ending 2024, AUFP brought in about $12.68 million in revenue, which is a pretty big jump from $745 million in 2023. That's a 70% increase, showing they're selling way more, likely because they've expanded their capacity. Then there's OMT, which focuses on making that mushroom compost. It's a pretty complicated process involving different phases to get the compost just right for growing mushrooms. And they're the ones actually growing and packing the fresh mushrooms. They've got a really big growing area and can produce a lot of mushrooms each year. They also started a processing business to make that mushroom seasoning powder. The whole mushroom market seems to be growing, especially with the trend towards healthier plant-based foods. People are looking for these kinds of options, and mushrooms fit right in. They're also expecting this market to get even bigger in the coming years. ESG Inc. points to their experienced management team as a key strength, especially with people who know both the mushroom business and the financial markets. They're also focusing on the most valuable parts of the mushroom production chain, like the compost and food processing. Being located near their raw materials is also a big plus for keeping costs down and quality up. Now, back to those regulatory risks, especially those related to China. They're subject to a lot of rules about food safety, data security, and how Chinese companies operate, especially when they're listed overseas. They mention new rules from the China Securities Regulatory Commission, or CSRC, and even the Cyberspace Administration of China, or SAE. These rules can be complex, and not following them could lead to serious penalties. They do have a legal opinion stating they believe they're compliant, but the landscape can change. They have a decent number of employees, around 20 management staff and almost 200 workers, both full-time and part-time. The company doesn't own its corporate office space in Pennsylvania. It's a month-to-month rent-free lease with a business associate of their CEO. Their main operations are in China, in a large facility covering over 400,000 square feet. Scroll the ownership of certain beneficial owners and management and tag.scristector. Speaking of management, let's talk about who's in charge. Ji Yang, the CEO, is the big boss here. He beneficially owns over 70% of the company's stock through a company owned by his mother. This concentration of ownership means he has a lot of control over the company, which can be good if he's making smart decisions, but it also means outside shareholders might have less say. So back to the stock offering. They're selling 5 million shares at $5 each, which should bring in about $25 million if they sell them all. They plan to use this money for expanding their operations, hiring more people in sales and marketing, and general business needs. It's important to note that the $5 per share price was determined arbitrarily. This means it doesn't really reflect the company's actual value based on its assets or earnings. So the price might not be a good indicator of what the stock is truly worth. Okay, now for the juicy numbers, let's look at their financial performance. For the first 3 months of 2025, their revenue dropped by about 33%, down to $1.58 million from $237 million in $2,000 million. in 2024. This was mainly because they had to pause operations at one of their compost facilities to build an environmental protection setup. This pause also affected their compost exports. Despite the revenue drop, their gross profit actually went up. It went from a loss of about $90,000 in early 2024 to a profit of $80,000 in early 2025. This is a good sign, showing they're becoming more efficient and controlling their production costs better. Looking at cash flow, they used a lot more cash in operations in early 2025, about $1.6 million, compared to the cash they generated, about $95,000 in early 2024. This big change was mainly because they paid off a large amount of accounts payable, meaning they settled a lot of their debts. Now let's look at the full years. In 2024, their revenue was $12.68 million, a big jump from $7.45 million in 2023. That's a 70% increase. This growth is largely due to expanding their compost sales and starting to sell that mushroom seasoning powder they developed, which is exported. Their cost of goods sold also went up, but not as much proportionally, which is good. Their gross profit margin improved from 23.5% in 2023 to 28% in 2024. This means for every dollar of sales, they're keeping more of it as profit after covering the direct costs of making their products. This is likely due to their increased production scale, which helps spread out fixed costs over more products. On the cash flow front, they generated a lot more cash from operations in 2024, around $1.34 million compared to just about $120,000 in 2023. Again, revenue growth is the main driver here. However, when we look at their financial health as of March 31, 2025, they had very little cash and a working capital deficit of over $6.6 million. This means they owe more in short-term debts than they have in readily available assets. This situation raises a big question about their ability to keep operating normally. They're relying on more equity offerings and debt financing, but there's no guarantee these plans will work. Let's look at their balance sheet. As of December 31, 2024, they had about $110,000 in cash, but they also had over $5.9 million in short-term bank loans and over $4.6 million in accounts payable. For the full year 2024, they reported a net profit of over $1.2 million, which is a big turnaround from a loss of $392,000 in 2023. This profit is great, but it's important to remember their cash situation. On their cash flow statement for 2024, they used over $1 million for financing activities, meaning they borrowed money and paid back loans. The net effect was positive from financing activities because they borrowed more than they paid back, which helped their cash position. It's worth noting that within their financial statements, they mentioned they're a holding company and that the financial results include their Chinese subsidiaries. The non-controlling interest, which represents the ownership stake not held by ESG Inc., is a significant amount over $3.5 million. The auditors themselves are raising a red flag here, stating that the company's limited cash and working capital deficiency raise substantial doubt about the company's ability to continue as a going concern. This is a serious statement, essentially meaning the company might run out of money to keep operating. They are trying to get long-term loans and maybe a tax refund to help with their cash flow. You can see the heavy reliance on bank loans here. They owe millions across several banks, with many of these loans due within the next year or so, and they are often guaranteed by the company's founder or related parties. This shows a significant debt burden. They also have a major concentration risk. For 2024, about 31% of their sales came from just 5 customers. And for their accounts receivable, one customer made up over 95% of the total. This means if they lose even one major customer, it could hit them really hard. The costs associated with this stock offering, like legal and accounting fees, are estimated to be around $30,000. This is relatively low compared to the amount of money they're trying to raise. This section lists all the supporting documents, including legal opinions and agreements that are filed with the SEC. It's like the appendix for the whole report. And finally, the signatures, including the CEO, Ji Yang, confirming that everything in the report is true to the best of their knowledge. Now let's put on our investor hat and look at the big picture. ESG Inc. is essentially a startup with a lot of ambition in a growing market, but they're facing some serious challenges. They've shown strong revenue growth in their main operations, which is a positive sign. However, their financial health is a concern. The working capital deficiency and the auditor's going concern statement are major red flags. The heavy debt load and the dependence on a few major customers also add significant risk. Their strategy seems to be focused on expanding their production and diversifying their product line, which is good, but they need to manage their cash very carefully and secure more stable long-term financing to overcome their immediate liquidity issues. The fact that their CEO has such a large ownership stake means he has a lot of incentive to make this work, but it also means investors have less direct influence. In conclusion, ESG Inc. is in a growth phase with a promising product in the mushroom industry. However, the significant financial risks, especially the cash crunch and reliance on short-term debt, along with the considerable risks of operating in China, make this a very speculative investment. Investors should be aware of the high potential for both reward if they turn things around and significant risk of losing their entire investment. What's your take on ESG Inc. and this filing? Do you think they can navigate these challenges? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate deep dives. And seriously, join our Discord community in the description. It's a great place to discuss these filings and get your questions answered. Thanks for watching, and I'll see you in the next episode of Corporate Decoder.